And what people need to understand is Tesla has four core advantages. One, they were one of the first to take battery production in-house. They have lower cost batteries than virtually anybody but the Chinese. Second, they've got an advantage, what's called over-the-air software. That gives them a big advantage. Third, they took their dealerships in-house. That gives them a big advantage over others years ago. And fourth, they've been a leader in the robotization.
Able to profit a lot more when it comes to their cars at 18%, 19% here if you're looking at the United States, rather than maybe some other EV players or hybrid players that are out there that are only making around 5% or maybe 6% margins when it comes to the cars. So obviously they need to sell more in order to be a little bit more profitable. So it's kind of a double-edged sword, but Tesla's definitely taking it in stride and continuing to ramp up their production in China. And hopefully we start seeing a little bit of an end to this price war, a little bit more price stability here, and that's going to provide investors a little bit more ease or calmness when it comes to the future outlook for Tesla here in the near term. In the long term, investors that invest in Tesla are really bullish on this name, and I continue to talk to them on a day-by-day basis.
You know, Kev,
in just a few days from now, Tesla will make a very important announcement, and this could significantly affect the way Tesla is perceived in the auto industry. In fact, it could determine how well Tesla stock performs for the rest of the year. Join us as we navigate through the possibility of yet another interesting quarter and unravel Tesla's secret method for achieving record-breaking delivery numbers. As Tesla approaches the end of the third quarter of 2023, what investors are probably looking out for at the moment is its Q3 numbers. Already there's doubt about Tesla's performance, and analysts are already starting to lower their expectations. For instance, Wall Street analysts expect Tesla to report third quarter deliveries of 455,000 units, missing the consensus forecast of 463,000 units. New Street research analyst Pierre Ferragu predicts an even lower figure of approximately 438,000 units, citing factory shutdowns as a significant factor for causing this shortfall. While there are reasons to doubt Tesla's performance for the third quarter, there is also reason for optimism regarding the company's performance. In this video, we'll go through all the factors that have been raised regarding questions about Tesla's delivery figures and why the company may actually be well positioned to succeed. Let's get started.
You know, I was reading in Barron's over the weekend, and they were talking about the competition in the space and actually noting that BYD has been taking market share and actually at 37 to the tune of about 37%, 4 times Tesla, leaving competitors like Li Auto, XPeng, and NIO in the dust. Where do we stand? Are we worried about the competitive space for Tesla? Because everybody always says what a leader Tesla is.
Look, the whole world's going electric. Tesla's the king of the hill. They just delivered 466,000 cars in Q2, $25 billion, on track to do 2 million cars this year, $100 billion in revenue. The Model Y is the best-selling car in the world, and they're about to launch the Cybertruck. So this is good news for them. But if you look at the big picture, Tesla, 21% of global EV auto share, BYD at 16.7%. But rounding out the top 5, 2 other Chinese companies, GAC at 6%, Volkswagen at 4.7%, and SAIC. So 3 of the top 5 selling EV brands globally are Chinese. There's a changing of the guard here.
Yeah. Take some water. You know, there's so much going on. We had a great conversation with the chief financial officer of General Motors today. They're doing their push in EVs. There's concern about a strike by the UAW. They talked about how much inventory that they have to keep on hand in case of a strike. Where does that fit in for the Tesla picture? Could you know, one man's problem be another man's, you know, win here? Where does that fit in here? And does Tesla have enough inventory?
I think Tesla will have inventory. Look, they've got 5 plants at full production now. They've just broken ground on another plant in Monterrey, Mexico. More coming. I think the big question when you step back and you look at BYD and say, wow, 352,000 cars they sold in Q2 to Tesla's 466. They're getting pretty close, but BYD is growing faster, 95% year over year. So keep an eye on the Chinese. The big question, if you step back and look at this, is will Americans and Europeans buy Chinese brands in general, but especially with IoT devices in every car? I think a lot of people are not going to feel comfortable with that. And the other big question is Tesla's lead in software that drops 99% profit margins to the bottom line going to outweigh China's big advantage in low-cost batteries? Those are the big questions. We'll see how it shakes out.
One of the keys to Tesla's success in the EV segment has been lack of any real competition. This is changing as automakers worldwide have committed to moving away from ICE vehicles to entirely EVs by 2035. As the EV market continues to grow, the competition has intensified. Several established automakers and new entrants are vying for market share, and some have even introduced compelling electric vehicles. This competition raises questions about Tesla's ability to maintain its dominance in the industry. And as good and popular as Tesla models have been over the past decade, the company faces real competition from the likes of Volkswagen, Hyundai, Ford, GM, Mercedes-Benz, and BMW, to mention a few, as well as newcomers from China. Each of these companies wants to chip away at Tesla's market, and will probably do so with attractively priced and competitive models. Hey guys, welcome back to Tesla Tomorrow. There are several reasons for Wall Street's predictions on Tesla's Q3 numbers. First up, during the third quarter, Tesla temporarily halted operations to upgrade equipment at its factories, resulting in reduced production levels. Additionally, the launch of a Model 3, an updated one in China and Europe, has also led to a decrease in sales of older Model 3 sedans. Supply chain challenges may have also contributed to this prediction. Like many other industries, the automotive sector has been grappling with supply chain disruptions, including semiconductor shortages and material shortages. These issues have affected production volumes for various automakers, leading to concerns about Tesla's ability to meet up with delivery targets. Similarly, the global shipping and logistics industry has faced bottlenecks and delays, affecting the timely delivery of components and finished vehicles. And these issues have created uncertainty about Tesla's ability to transport vehicles efficiently to various markets. So, will these issues truly lower Tesla's Q3 numbers? Let's find out. But before we carry on, if you're liking this type of video, make sure to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. While research analyst Pierre Ferragu predicted delivery numbers that represent a decrease of around 6% for the second quarter delivery of 466,000 units compared to the third quarter of 2022, it is still an increase of approximately 27%. Ferragu remains optimistic, despite the lower estimates, and maintains a buy rating for Tesla stock, with a price target of $350. According to the analyst, although he does not foresee Tesla's current challenges as an impact on the stock, and a positive one at that, he maintains that the situation does appear to be stable. Ferragu's long-term outlook for Tesla is anchored on the company's sales volumes, growing by about 50% annually over the next 2 years, and he expects Tesla to regain its car business gross profit margins to 25%, rebounding from a decline due to recent price cuts. The thing is, despite the recent challenges, both institutional and retail investors are reportedly prepared for a potential miss in delivery targets. High retail ownership, which holds over 40% of Tesla's shares, has prompted an institutional investor to pay attention to smaller investor sentiments. So while there shouldn't be any significant changes in investor behavior, and who knows, there might not be a significant drop in delivery numbers either, but it's all up in the table for now. While doubts persisting are actually there regarding Tesla's Q3 2023 delivery numbers, partially due to supply chain disruptions and an increase in competition, there are also compelling reasons to remain optimistic about the company's performance. Strong demand, production expansions, innovation, and a diverse product portfolio position Tesla to thrive in the evolving EV landscape. The automaker's ability to overcome challenges and its commitment to sustainable transportation make it a frontrunner in the EV industry, and investors and enthusiasts alike have reason to be hopeful about its future performance. Despite supply chain challenges, Tesla does continue to enjoy strong demand for its vehicles. The company's brand, technology, and reputation for innovation have created a loyal customer base, with pre-orders and reservations for Tesla vehicles remaining at high levels, indicating a sustained demand. Tesla has also been expanding its production capacity globally. New gigafactories in Texas and Berlin, along with continued growth at existing facilities, signal Tesla's commitment to increasing production volumes. They are also expected to help address supply chain constraints. There are also several other factors to consider, like over-the-air updates, as well as Tesla's reliability and its ability to adapt to changing situations. The automaker has demonstrated resilience in the face of challenge, and has also navigated production bottlenecks, regulatory hurdles, and market fluctuations, all successfully. Similarly, Tesla's ability to deliver software updates over the air does allow it to enhance features and capabilities continuously. This innovation keeps existing customers engaged and brings in new buyers, contributing to Tesla's sales performance. Additionally, its diverse product portfolio is a huge strength. Tesla offers a diverse portfolio of electric vehicles from the Model 3 to Y. And it also goes all the way up to the Model S Plaid and the upcoming Cybertruck too. This variety allows the automaker to cater to different customer segments and adapt to market shifts. No doubt the result of Tesla's third quarter does seem pretty uncertain, but investors need to remain optimistic as Tesla has maintained a reputation for beating analysts' forecasts in the most unexpected ways. What do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.